Hey guys, it's Crossroads here. Thanks for joining me for the PayPal Live, PayPal Monthly. I do have a special guest coming. He's a little bit late. I think Tanner made him late, actually. Not really, but he'll be here in a few minutes. Anyway, we're going to go ahead and get started. And we're going to look at, of course, PayPal earnings themselves. We're going to look at some of the stuff from the SEC filing. We're going to talk about Investor Day. We'll talk about the stock and the stock movement. I know that's been disappointing to myself, probably to many of you guys too. If PayPal is still a good long-term investment, if something has changed in our investment thesis. And we'll also look at valuation as well as some of the most recent news too. So let's take a look here first. Let me throw up my, okay, I'm going to introduce my special guest here. Emir, welcome. How are you?
Hey, sorry for being a bit late. Had some technical difficulties, StreamYard and stuff, but here we are.
Yeah. Thank you for joining me. Yeah, it's been a little while since we've had one of these. I think last time I was on your channel, and so you get to be on mine, and we get to talk about PayPal, one of those names that we hold in common. So,
very interesting one.
By the way, like your hat. Yeah, yesterday I had a stream and was not related to Palantir, but I wore Palantir gear because that's another big one for us too.
You know, I wear it every day. Well, actually, I got 4 hats, like different colors. One is signed by Carp, so I will never use that one. But I still have this hope that I will be recognized, like the hat will be recognized in public. I even wear the sweaters and stuff. It's not happening, but one of these days, I've heard some reports on X that some people are getting recognized, and then relationships bloom, stuff like that. But we don't have any PayPal gear.
Not yet. Yeah, hopefully, that companies like PayPal see the trend, like what Robinhood's doing, what Palantir is doing, and they say, hey, let's be a little bit more open to retail as a whole, not just us as creators, but also creators too. I think it's good for a company. It's good for transparency. The more that we know as retail, like the easier it is to have confidence in a company. And that's probably one of the issues that I had, the biggest issue I had with their earnings. We'll talk earnings too, but Emir, since this is the first time on my channel, why don't you just tell us a little bit about yourself, what got you into investing, and kind of your investment philosophy, because it's a little bit different than mine.
Oh, well, for quite some time now, I've been an investor that solely focuses on intrinsic value, which is not very popular at all. Like either on the retail side or the professional side, actually. So I'm a bit of an oddball, but that's fine. I mean, as long as it helps me sleep well at night, that's all that matters at the end of the day, So there are a lot of ways to make money in the markets, and I just happen to like spreadsheets, like data, value businesses. So that's what I focus on in my channel. So it's a bit unique. Haven't really quite found anyone like me, so it's not like I can have someone to like go back and forth with. Arnie, people surely know Arnie in this chat. He's kind of close, but he just keeps telling me, yeah, you are like I used to be before I grew up. So he sees me as like his little brother version that just cares too much about numbers, but we'll see if I'll grow out of it. But yeah, I mainly focus on businesses that I consider to be fortress-like, that are very steady, you can call them monopolistic, you can call them high quality, you can call them businesses that have high barriers to entry. That kind of business, typically they've been around for a while, not the most exciting ones. People find them kind of boring, but I mean, they generate a lot of cash and make me a lot of money. And PayPal is not quite there yet, so I own PayPal for a different reason. So it's like the oddball in my portfolio. Like you will see in my portfolio, you will see businesses that are like completely dominant, which PayPal used to be. Now it's a bit more shaky, but PayPal, it's purely for the valuation, or used to be. But now with new management, there is actually some glimmer of hope of actually returning to the great good old times. So it's a very exciting business to track now suddenly, because me and you both, I know that we used to invest in PayPal even under Dan Schulman, the previous CEO.
Yeah, briefly.
And we were both kind of like, yeah, valuation does not make sense here, but we can't really see ourselves holding this like for
Oh yeah.
for the foreseeable future. It's like, yeah, get in, hope it gets re-rated, and then get out. But actually, under Alex Chris, that could change for me. We'll see. We'll see. I mean, it's still early days. It's been about a year and a half soon at the end of this quarter, and I'm liking a lot that we're seeing. But obviously, you can't just go in and like this is a very old business, very dominant in the payment space. You can't just like tear up everything, which they kind of did in Q4 in regards to, we will get into that. But you
Yeah.
can't just start from a clean slate. It takes time, unfortunately. So I understand that a lot of investors are not that interested in tracking this turnaround. It's not one of those quick ones, 1-2 quarters and you're done. But I still see a lot of value in PayPal.
Yeah, a lot of people back, year and a half ago were comparing PayPal to like a Meta turnaround. I'm like, no,
Yeah.
I don't see it. I'm not a Meta investor, but I'm like, they just need to stop spending like crazy on something that's just not going to generate revenue. That's an easy change. And the older and the larger a company as the more siloed as well, the longer that turnaround takes. And I think that's one of those challenges that I had with the earnings. I'm still a holder. I actually bought more PayPal. Was it this week or last week? I plan to buy more this next week. It annoyed me that PayPal rode up a little bit on Friday because I'm taking some gains on HIMS and I'm going to put that into PayPal. But I still see it as a great long-term opportunity, but the earnings call left a few things to be desired, and it might have been because of Investor Day. But let's start there with earnings. So I've got the slide deck here, and you can share anything on your end too. But just overall broad thoughts on earnings. Like how do you think that they did? What did you like? What are some things that you would have liked to see more of?
Honestly, the things that are kind of interest that a lot of people skim over are the details that I care about. Stuff like they're spending less and less on customer support, like continuously. That's always great to see. Even though we have the CEO, I imagine he's not cheap to have provide customer support on X, but overall it's going down if you track that. Stuff like average payment value per transaction, like how much are the users actually spending, and how's the activity, like how many payment transactions do you have per active account. Stuff like that just keeps compounding, which is like what has given me confidence in the business, even though growth has been slowing down and stuff like that. Like there has been a lot of, what do you say, bumps in the road for PayPal the last couple of years. But if you look at it at the most basic level, like even though like they stopped growing the total amount of active accounts, they've been actually churning them for many quarters. But if you just look like at the baseline, like are users transacting more? Yes. Are they transacting at an increased value per transaction? Yes. So stuff like that is still positive for me to see. So I was happy about that. Obviously, I was kind of taken aback by the large loss of market share. So for people that track it, PayPal reports total payment volume. And then we have reported global digital payments total transaction volume. So they are kind of interchangeable, total payment volume, total transaction volume. And by just dividing PayPal's payment volume by the global, like whole digital markets, you can get the market share. And that's been kind of steady. Like it had been growing up until 2022, actually. A lot of people think that as soon as Apple Pay came into the picture, or Google Pay or Stripe, that they started losing market share by a lot, but that's not the case. Actually, up until 2022, and these businesses have been around since 2014, up until 2022, they were actually gaining market share. It's only the last 2 years that they've been losing. So they went from 15.5% market share in 2022 to 15.2, so they only lost 0.3%, like under that 2023 year under Dan Schulman. And now in 2024, they're down to 14.6. So that's quite a big drop, from 0.3 of a drop to like almost a whole percent. So I was kind of taken aback by that. I didn't account for that. Like, I thought that I was kind of pessimistic in my valuation, and I was in a different way. I'm sure we're going to get to free cash flow, which surprise to the upside. But just on the revenue basis, I mean, I was kind of taken aback. So it was kind of disappointment. But yeah, I have revised my valuation to reflect the outlook and the story that the narrative that they gave us during the earnings call. Like, yeah, we're gonna restructure some of our deals on the parts of our business that's growing the most, and that will affect growth, which it certainly looks like it is doing. But yeah, what takeaways do you have? Because I kind of, when I look into businesses, I stay away from listening to anyone or like reading about it. I kind of want to get my thoughts first before I like risk influencing myself with anyone else's thought. But now, obviously, I'm open to listening to your takeaways, your main takeaways from the call.
Yeah,
from the earnings. Sorry.
So my main takeaway, and tell me if you agree with this or not. I think that this is essentially why a lot of people were really frustrated with the earnings call, is it felt like what they were guiding for was another transition year. Part of that is, and you alluded to it, it's one of the reasons why they have a smaller market share, is they've shifted their Braintree strategy. And we'll look at the earnings slide deck here in just a second, guys. By the way, we'll do that. We'll have Emir go through his valuation model. He does it in a little different style. I'm sure you've heard of DCF valuation. Very, very thorough. If you think Tanner likes spreadsheets, no. Emir makes Tanner look like he hates spreadsheets. But he's awesome, and it's great to look at things from multiple perspectives. At the end, we'll get into some questions too. We'll take them along the way too if I see them pop up. A lot of times I'm just so focused on this. But so yeah, I feel personally like this is another transition year. Probably we need to hear more in Investor Day, which is February 25th. It's coming up. And I feel like that this earnings was very incomplete just because some of those things that I'd like to hear about, like the ad platform, the early read on how that's going, minimum monetization, a little bit more on that, and just the overall strategy. They gave us some details on things, but ultimately they're intentionally slowing Braintree revenue, offsetting that for higher margins. And so what this is doing is that's actually a drag on their overall top line revenue growth, but their transaction margin dollars, which is net dollars essentially, and their margins are also improving as a result. So Dan Schulman's was a different model. It was growth at all costs. Who cares if it actually hits the bottom line? It will one day. Well, I looked at their Investor Day from 2021. That's the most recent one they had under Dan Schulman. That was a strategy, and boy, did that fail. There's a reason why almost the entire C-suite, I think Frank Keller is the last man standing from the prior regime. So this strategy, I think, is a lot more sustainable. Alex Chris has talked about driving profitable margin growth, but it's taking a little bit longer than myself, perhaps you, and perhaps some that are in the audience are expecting. I still think it's worth the wait. But what do you think? Is this another transition year for us, Emir?
Ironically, growth at all costs is actually what Wall Street prefers. That's the kind of business that they will drive up the stock price off of, which we kind of saw during the pandemic highs. No one like stopped for a while to see like, okay, what are they actually doing here? No one cared. The stock raised to 300, and then we have the aftermath, which is what we're living now. As for transition here, it's I kind of have a feeling that they are kind of like keeping their cards close to their chest because they only give us quarterly guidance. I don't quite buy the reason. They're like, yeah, we will only guide 1 quarter out for revenue because that's been working for us. I'm like, well, what are you guys talking about? What? Why can't you share any details? And of course, the ads platform, because what is so
here's And you're exactly right. Like the top line revenue is not the goal. It should not be the goal for PayPal. Like actual real money, revenue is important. Honestly, they should probably still guide for it. But yeah, this is net dollars right here. That's important. But like 4 to 5% growth. Yeah, and I think that they said low single digit growth. They didn't put it on the slide, but for revenue, like that's not exciting. And a lot of it is just basically due to Braintree's slowdown. Jamie Miller, the CFO, mentioned, and she said it's a 5% drag overall on their top line revenue growth, but it does offset and give a 1% increase to the transaction margin dollars. But yeah, long term, like if this was all that I thought that there was for PayPal, I'd be like, all right, I'm out. So Investor Day, very, very important. Yeah. Did it surprise you at all that they didn't mention the ad business?
Uh, well, not once I knew about the investor day,
Yeah.
but I just have to make clear. One thing that I think a lot of people just passed by is that international is reaccelerating. It had 0% growth in 2022. I think it was negative in 2023, and now it's accelerated to 8.1% growth. If we look at international, and the crazy thing with international is that if you look at global currencies, the dollar is very, very strong. So that, of course, affects it. I don't know quite how they calculate the FX neutral one, but I can tell you that the dollar has surged, 10 to 20% against other currencies. So, that ought to be huge for them. But yeah, what was the question? Sorry, about the investor day, or
Yeah. So like the lack of mention of advertising at all, like not even one mention, and very, very light details, actually less than the prior quarter on a lot of those first look products that Alex Chris is rolling out. So it took me, I'll just say for myself, I thought that they'd at least mention and they'd say, hey, there's more coming in Investor Day. Stay tuned. No,
yeah,
not really.
it's not like the cat's out of the bag. They've been very open with like, yeah, this is coming. So it's very strange. Typically, for the annual calls or annual presentations, they typically share a lot more in slides, businesses as a whole on that are publicly traded. So yeah, I was kind of surprised that they didn't even, because let's look at it this way. Let's say that you are an investor, professional or retail. When you're looking into a business, what's the first thing you do? You open the presentations for the annual, like you open the annual report because that has the most details, and then you work your way back. If someone comes and looks like, okay, let me see what PayPal's doing, there's like no mention of it at all, which is like quite a huge component. Because if you think about it, if you look like who, just openly, I want everyone in the chat to think about this, who is best positioned to serve ads of any business? Meta is growing a lot in ads, but Meta is just a collection of social media platforms. Sure, they do have a marketplace, they do track your activity, but who actually tracks where you're spending your money on what cards you're using, your patterns of spending? There's no one better poised in the world than PayPal to actually serve accurate ads.
Oh, yeah.
So I mean, this is something to be very excited about. And if you just look at their vaulted information, I think the last figure we got was something like 25% of the globally issued credit cards are stored in PayPal's vault. Like, that's massive. Like, one in every four credit cards that have been issued are in PayPal's vault. They have this information. They're not leveraging it right now, which is just crazy. So, of course, they have plans for it. I am expecting that on Investor. If we don't get that on Investor Day, then I don't know what to say. But yeah, I was kind of surprised that they didn't mention it. Like, part of it is I am eager to know, but I guess I kind of understand that they're saving that. But then again, Alex Chris came into it first quarter. He said, "Yeah, we're gonna be a lot more transparent," and I'm like, I don't know.
Yeah,
right?
I'm thinking I have no inside knowledge on this, but I'm thinking that they basically said, "Well, we don't want to spoil Investor Day. We want to save that for Investor Day." But in hindsight, and really at the time, like they should have just said that. Just we're going to talk about these products. It's coming up in 3 weeks, guys. There's some awesome things happening. We just want
Yeah.
to save that. So stay tuned. There's more to come, or the best is yet to come, or something like that. But we
Yeah,
got
but did you learn from last year? With the we're gonna shock the
yeah.
world and the fallout from that, and maybe it's like maybe let's just keep.
Yeah, I honestly think that that's part of the reason why that they are being very conservative, deliberately so, and they are being more transparent on a lot of things. But yeah, advertising business is one of those key bull pieces. Like people ask me all the time, oh, like, what's the mode of PayPal? And they have a few, but I think their strongest is their data itself, and it's something that they leveraged for a couple of items, a couple of things internally, a couple of products externally, fraud protection as a service, for instance. But like largely, they've not monetized or used or leveraged that data. And that's exactly what the most significant of those first look products are doing. That's Fastlane. They can really, really leverage that data. I did love that Alex Chris did say in the earnings call that 75% of those that are using Fastlane are like brand new to PayPal. Like they have no interaction with PayPal at all. That's awesome. They actually have a real flywheel. We see monthly actives tick up, and I don't think it includes Fastlane users. And they have Mark Grather, Dr. Mark Grather. We've talked about this before. He was the guy that built out and was an architect of Uber's advertising business, which has over $1 billion annual run rate in like 2 years' time, a little over 2 years. He also was instrumental in building out Amazon, and Amazon's like the king in this sector as far as retail marketing. So, not hearing in anything, not even a mention, is like, oh man. So I would.
Uh,
It has to be an investor day. Like if they don't say anything about advertising, I'm going to be really upset. I might, take some off the table. I'll probably take a lot off the table, actually, to be honest. But
here's
I,
the best part, that when I value PayPal, I don't even consider that they do have an ads
yeah,
platform, because it's intangible. We don't know anything about it. So typically, investors are always forward looking, of course, but I give myself a lot of leeway and what's called optionality when you value businesses, is that I am paying for my forecast of the current business. Anything they do on top of that, I essentially get for free. So with the Palantir, there's this famous example when it was trading around $6 per share. You were essentially only paying for the government business, and you got commercial for free.
yeah,
Like stuff like that, which makes me like not too stressed about it. And actually, I had told myself a while back, like, okay, my PayPal position is built. I'm just gonna wait now. I have a great average in the like 50s. I have like 40% of my portfolio in it at the time. I'm like, I'm not doing anything. But after this Q4 with the sell-off, I just thought it's so unjustified that I actually had to buy a little more.
oh, yeah.
But you mentioned something interesting there with the growing the merchant base. Aren't you also annoyed that they stopped reporting how many active merchants they have? That's actually something that I was hoping was going to come back under Alex Crisp, but they just completely ceased to
Yeah.
report that.
I
Which, I
actually
mean, when you have this narrative that you're like, okay,
double
we are
sided.
actually targeting a lot of SMBs now. We're doing a lot of stuff for our merchants. We are providing value with value added services, all of this stuff. But they don't report on the progress. Like we can't really track it, which is kind of an annoyance to me. Just an anecdote.
Yeah, no, I agree. Like that's one of those things where I had to double check real quick.
2022 was the last time,
Yeah,
and it was
yeah.
at 35 million merchant accounts, and
And
it
I mean, we can see some things like indications, but we don't see the actual number. So like one of those the other merchant services, that's growing well. That's just FXN, dollar neutral growth. By the way, on dollar neutral growth, um they lost about 200 million just because of the strength of the dollar. It's like 207 million. Their cash and cash equivalents gained a little bit. It was in their SEC filing that I found. So it's a drag in a global company like this. But yeah, merchant services are growing well, but where are the number of merchants? That would be really nice to see. I'll have to look through the SEC filing to see if they have it, but
So
probably not, I'm guessing.
I'm gonna give you my guess because Palantir does this too, and it's always so annoying. So actually, they were growing merchant accounts roughly at 20% per year since 2015. So 2016, 15% growth, then 20, then 17, then and so forth. And then 2020 was 20% again, 17, and then 2.9. And after that, they just ceased to report it because they went from 34 million to 35 year over year, like just added 1 million. And then they're like, doesn't look too good. Just remove that stat. And Palantir does the same thing. Like it's so annoying when they just suddenly stop reporting stuff because this doesn't look good. And I'm like, come on, guys.
Or they make it like the tiniest, like font 3 foot. Like
I'm fine with that. I'll find it, but at least give me
like,
the number, you know.
Come on, guys. Yeah, I'm actually planning to do a series, and it may not be for a month or two, but on like basically how to read investor presentations, earnings presentations, SEC filing, just for people that are brand new, very top level. Not, but like that's one of the things I'll mention is like look at it quarter over quarter, and if you see key information drop off, that is something to pay attention to and ask why. Now, sometimes it's because of a shift in strategy. For PayPal, for instance, like the top line revenue, that's not the most important thing for PayPal. And the adjusted versus non-adjusted EPS is very, very similar now, just because they're including, they're not like pretending that SBC isn't a real cost. But yeah, anytime you see something like that. Well, so let me go through a couple of numbers and we'll talk about some highlights. And then we'll also talk about some lowlights as well. So one of those things we already mentioned, the total payment volume was okay. International actually growing was good. Cross-border was okay. Now, I think was most important, this was part of the bear case, was this take rate and also margins is a separate page, but it's built into this. And we see it looks like that they've actually bottomed, and we can see this strategy. It's lumpy, it's not going to always go up in a straight line, but it seems like that they've hit the bottom of that. Let me see. Yeah, here's a transaction margin page. So we can see down here.
The way why take rate is great to see increase specifically for Q4 because it's one of the most competitive quarters because of the holiday season. So typically, logically, you lower your margins for that quarter because you're expecting so much revenue and you just want a bigger piece of the cake. So when you actually show strength in Q4 on the take rate, that's a very good sign.
Yeah, and here's that transaction margin. You can see it looks like it bottom here, first quarter 2024, and we can see it continues to climb each and every quarter. Part of that is that shift in strategy. There's a number of things, but it's been a complete shift. Now going back here, you mentioned it before, but I wanted to show it as well. This is showing active accounts, and the way that they define active accounts is if they've used PayPal one time in the last 12 months. Well, that's probably not the best measure of actual activity, but we see that for the first time, this is actually up on a year-over-year basis, even though it has been climbing all year long. They're likely to hit a new all-time high, which previously was 435 million. This next quarter, they'll probably be closer to 440 million because they're growing between 1% and 2%. But yeah, monthly actives is a new one of those new, more transparent measures. And you can see here just how flat this was for the longest time. And yeah, you get a little bit of bump in fourth quarter because some seasonality, but it's actually growing like consistently 2 to 3% monthly active users, which is really, really good for PayPal, especially now that they have a flywheel. Number of transactions actually decreased somewhat. That's because that Braintree strategy. It will be a headwind against that. But one of those things that I was most excited about, let me stop sharing and reshare this. And you mentioned it before, was free cash flow. So this is Alejandro's website. You know Alejandro, right? Alejandro Chavez. Yeah. Visual Stocks. So not a sponsor or anything, just a friend. But this is showing on the annualized basis free cash flow. And if we go further back, you can see PayPal just kind of stopped growing with free cash flow. Now, free cash flow is not the way to measure every single business, especially those that are growing rapidly or like banks where it's not a good measure at all. But for a business like PayPal, this is one of my key measures. And you can see here, like they kind of peaked in 2020 and just stayed around that 5 billion mark. Now, over in a quarterly basis, you can see it can be pretty lumpy from like one-time bumps, one-time divestments. That's the case here. They weren't actually negative. This is like a bump that was realized in Q4, both through the divestment of Happy Returns and also that KKR deal where they sold the buy now, pay later loans. But if you look at it on the yearly basis, which now we have all the yearly data, close to $7 billion in free cash flow versus 4 the previous year. And they were just barely at 5 the 3 years before. They're on the top line. PayPal is not exciting at all. Like you look at that revenue growth, you're like, man, this is disappointing. Bottom line, they're building something that's actually sustainable. They're building, in my opinion, that foundation. But we need to see where that strategy is going to take them and have that clearly laid out in Investor Day. And hey, if it's not there, I'm always honest with you guys. I'll be like, hey, I'm taking some off the table, or I'm taking, like, if there's something terrible, I'll just be like, I'm out, guys. Sorry. But no, I'm still in. I'm still buying more. Was there anything else that stood out to you as far as like a positive or just kind of a surprising negative from the earnings call itself or presentation?
I haven't really dug into PayPal yet because it's earnings season. Have to do a lot of work on a lot of businesses, so I haven't really combed through it. That will probably be another week or so. So it's unfortunate we do this week where I just have the basic glance. But I like to look at the free cash flow to the firm and not to just the free cash flow, because it doesn't look at actual reinvestments into the business. You just take the cash flow from operations minus capex, and then you have your free cash flow. Or in PayPal's case, they actually have the impact of net outflows from European buy now pay later, as you mentioned, but it doesn't actually have the whole reinvestment part. So in that regard, it is a bit worse for this quarter. Actually, if you look at the company reported free cash flow, it went from 15.3 to 21% essentially. But actually, free cash flow to the firm, which is actually what is distributable, like actual cash available for shareholders, it went from 15.3% margin to 14. So it actually decreased, but I'm not too concerned about that. That's mainly from the changes in working capital, which is to be expected when you're gearing up to launch new products and stuff like that. So it's not anything horrible, but yeah, very strong guidance on free cash flow, which is like the main thing actually for valuations, not cash flow that they report, but because you need to add the reinvestment part. But it's very telling that they are driving the company to be a lot more profitable. And the narrative has always been like profitable growth, right? We're just missing the growth part now,
Yeah, no, and that's one of those things. Is when Alex Chris, I think in his second earnings call, might have been his first, he said PayPal is a growth company. Yeah. Not if it grows in single digits like this. It's got to reaccelerate. Now, it's not going to grow like Hims 90% or Robinhood 100%. Like it's so massive, like large numbers. Like it just can't. But can it reaccelerate where it's growing at double digits for a number of years? I think absolutely, but that has to be through new products. This, by the way, was the guidance on the free cash flow, which I really enjoyed seeing that they were reiterating like, hey, this year wasn't a one-time fluke with free cash flow. We are continuing to guide for increased free cash flow. And they tend to be a little bit conservative. So I think that there's a chance of some upside there. Now, some people ask me, I think, like, will it be 10 billion? No. But it might be like 7.5 billion, 8 billion. Now, one thing that I wanted.
Well, we forgot the best part from the earnings.
Okay,
but maybe you're getting into that, so I'm gonna let you.
What's the best part for you? Buybacks?
Yeah, the buybacks. I was going to say that. The
Yeah.
buyback.
Yeah. Like, what did that come out as a surprise to you, or were you
No,
expecting them to
no.
reiterate, or like, how did you take that?
Look, they've been very clear that they understand that how undervalued. I'm gonna create the chart now. Just give me a moment. I'm gonna
Yeah.
chart this up for us. But no, they've been clear what they are intending to do, which is as long as it trades so significantly undervalued, they're gonna repurchase shares, which is 100% the correct decision. And I made some like calculations for fun, and it would take at the end of this decade, if the stock price doesn't move and they just keep buying back at the same rate, they will have rebought all outstanding shares by the end of this decade, which is like, yeah, that's not happening. Like this stock has to move like at some point.
Yeah.
Let's see here.
Short term in the market is a voting machine. Long term, it's a weighing machine, and the fundamentals do matter. So, Gig had asked this, and I've seen this question a number of times, even some in the live guys. Thank you guys for the questions. But he said, if possible, can you please discuss your thoughts as to why would PayPal not issue a dividend? Would you, as a shareholder, consider the relatively low growth preferred one? And he also says, oh, that's not it. I'll hide that. So do you think that they should have, or that they will in the near future issue a dividend, or should they just be focused on buybacks here? And maybe a dividend comes, after the stock actually appreciates in price. Where are you on that?
No, they should definitely focus on buybacks, because you can issue a dividend at any point in time, but you should only really be buying back shares when the stock is trading significantly below intrinsic value, and who better to know that than them? So I got the chart here.
All right,
Let's see how that shows up. So yeah, they are actually, it looks very dramatic. That like the percentages aren't massive, but it's like they bought back 6.1% in 2024
yeah,
on a diluted basis. And I can share like the quick calculation I did on just let's see. I'm gonna try to zoom in. It's kind of hard when it's just like so small. Does it
it's
show up on
readable.
stream?
Yeah.
Yeah.
Let me.
So if we just take the current market cap of 78 billion, and then I'm using my free cash flow estimates, which for 2025 is 5.5, which is significantly below what they said. So I'm very pessimistic in like uh, my own forecast. But if they devote 100% as cash flow that they are starting to get, so this doesn't even look like, okay, how much cash do they have on hand? It's just like, okay, from what they generate, if they just devote that to buybacks, how long does it take before they buy back the whole company? So it's essentially by 2033 in absolute terms. And I also dilute like every period by about 1.1%, which is roughly in line with what it would be if you translate. Of course, because they are buying back shares, it doesn't like show up for us like, okay, how much did they dilute this quarter? So you only get the SPC expense, and then you have to make some assumptions. But yeah, so I dilute by 1.1%, and very fast, like by the end of this decade, they are less than half of their market cap, and should be less than their revenue also. So like less than one price to sales, if that's the case. And then give it 2 more years, they're down to 183 million, then 40, and then it's just gone, like taken private. So yeah, of course it is completely unsustainable. Looking at the buybacks, I expect that to continue. Dividend doesn't make sense at this point in time, because it just creates so much shareholder value to just keep taking these cheap shares off the market. So I'm guessing you have similar feelings as me
Yeah.
on the matter.
Yeah. If PayPal was trading at like 150, 200, like, yeah, do the dividend. Right now, like I'm buying the shares. I think that they're cheap. The company should probably as well. That's a good use of their cash. they're also not just using their cash for that. I went through like the SEC filings, and basically their marketing spend went up. They were very OpEx efficient outside of that, but they're going for it with a lot of these products. And I don't mind seeing that. But at this point, like if they did a dividend, maybe something like this, like an Nvidia type dividend or Meta dividend, where it's not a real dividend, but it's just enough to entice new investors. I'm not opposed to that, but it feels gimmicky to me. Gimmicks are okay. I'm not against that. If they do that, that's fine. But I think, if somebody's looking for a juicy dividend, they're going to probably have to wait for a couple of years, like 2 or 3 years, just because they've reauthorized at this point a lot more buybacks, which will take them out, 2.5, 3 years. What do you think about this? So should they do like a token dividend?
No, I don't think it's going to be enough to create interest in your stock by actually innovating, doing what you have promised to do, because I think it's on a lot of people's radar, but kind of like in the back of their mind once they realize that it's not the meta turnaround as you mentioned, so it's gonna take time. But even then, it is completely like, okay, let's just take the current business. Forget about ads; they're not gonna do ads in this scenario. They are growing like single digit, but they're increasing cash flow. So just look what they're doing as of right now. Why is the stock so oversold? Why? Like, what is the reason, would you say? Like, why are we given this alpha? Are we the blind ones? Are we not seeing anything? Or is the market just like, I can't figure it out? Which, of course, markets do not always make sense, which is what allows us to buy Palantirs at $6, which is what allows, all of these great opportunities from time to time. But as for PayPal, typically, like for Palantir, you could make an argument. At the time, it was a black box. They didn't have a way to scale. They didn't like you can make an argument like for PayPal. What's the argument? Okay, PayPal is a dinosaur. Okay, even as a dinosaur, it's oversold. Like, what are we talking about here? So,
Yeah.
what's your take on that? Because like even like the worst case like narrative, it's still like undervalued based on that. The
So,
way I
I think it's a lot of what you mentioned. Top line revenue is what the market looks at instantly. That's the instant read. I don't think the other factor is I don't think that they really understand the strategy, and that's kind of the key here. Like Lucas had said it himself. I'm waiting for Investor Day before I sell. Sounds like he is going to sell, and that's fine. Like if I see something where I'm like, hey, this isn't it, guys. I'll do the same. But I think that there's a lot of like the way it works on the street is you don't just wait and hope that Investor Day will be fine. If there's uncertainty, the market doesn't like that, whether it's the whole market or individual names. And there's a lot. Now, we got some good things. Let me add this stage here. Like, this was some of those updates, and it shows, that strategy driving progress across key initiatives. And you have 25% of US branded checkout on upgrade experience, which is a lot faster than what they used to have. They're scaling omni-channel. Debit cards have increased. It's like 1.5 million holders of that, and it's a new product. Venmo is growing like gangbusters, and SMB side is also accelerating. But there's a lot that's just unknown, and that's very, very difficult. So,
have you
Matt,
like the one major thing under Schulman which they kind of adopted, because this is not like a lot of the stuff that PayPal has been doing isn't like thought of under Dan Schulman. I think they had like this it's not like an investor day, but rather like management day, like that they did at the company, I think around the end of Q2 in 2023, where they laid out this whole new strategy about guest checkout being passwordless and all of this stuff with what was it called? Kim, I forget the
John
full
Kim.
name. John Kim.
Yeah.
Yeah.
CTO.
So like they held these presentations and they're executing on that plan. But I know that they've started to roll out this new guest checkout solution. I know they are doing these incentives inside the app to get people to the app, which I guess is why peer-to-peer is growing. X Venmo, which is basically just PayPal peer-to-peer. It grew at 10% year over year. So that's like strong. But
yeah.
it was also negative 10% the year before, so it's not a strong comparison. But I mean, they are doing stuff, but I'm not seeing it because I'm in Europe, in Sweden. I'm an avid user of PayPal. It's just convenient, but I'm not seeing any of this innovation, and we can talk why that is. But just first, before we get into that, have you actually tried any of these new experiences? Because I know that they have been rolling out in some limited capacity so far. Because we have all these, even during the call, they have all of these pilot results that they report. Like, yeah, in this pilot, we are seeing 5 times the transaction rate. I'm like, okay, great, but where is it? So
Yeah,
have
no,
you experienced it?
I've seen and used that upgraded checkout. It's a lot more seamless. Like you unless you're paying attention, like an investor, you're just like, oh, that was easy, and you just move on. And that's
Mm.
great. That's exactly where they want the product at. I'm not using the debit or credit card. They're kind of scaling back the credit cards anyway. But Venmo I use, but I haven't seen any difference there. The app itself has gotten a lot better. The reward structure as well, and the way that the rewards work, that's improved a lot. So I've seen a lot of improvements, but yes, it's lumpy, and usually like a lot of businesses that are based in the United States, like that's where they launch the product. They're like, hey, we'll do it here, then we'll expand it internationally. And that I believe was from 2 quarters ago, maybe 3 quarters. And they kind of mentioned that was their strategy with this new checkout system, and of course the omni-channel push as well. So, but that doesn't mean it's never coming to Europe. You guys will get it, and then last but not least is Canada. Canada might get some new products sometime in the next like decade or two. It's just like every company treats Canada that way, and a lot of it too is regulation too. So it's a little bit easier here on the States to do that. You have the largest, customer base here in the States, and I mean the wealthiest too. So why not start here where it's close to home? But hopefully you'll start seeing it relatively soon. Let's if you want to chime in on that, let's do that. We'll go through some questions, and then we'll go to your DCF valuation. And
Yeah, sure. No, I just wanted to talk a bit about what the challenges are, because we know that like for about 2 years now, they have been trying to roll out the PayPal Complete Payments (PPCP), and now we have Fastlane, and it just feels so slow. And the reason given, like obviously I don't work in that space, so I'm no expert, but like the logic makes sense, but we're not really given like actual progress on the rollout, more than like, yeah, it's like it's going well, stuff like that, but we don't like have actual progress that we can track. But one of the main reasons is that PayPal at its core is a legacy system, which they call it themselves, like PPCP, all of these Braintree developments and stuff like that they're trying to roll out, like Fastlane and to their merchants. It's very difficult because one, they are on the legacy system. In order to upgrade, you have to take that offline. Now, what merchant wants to make their payment solution unavailable to their customers? Like no one. So they have to find like this way to, as seamlessly as possible, like upgrade to a more modern solution and tech stack. And from my understanding, the same issue won't happen once you are on PPCP, because they have this way to upgrade the platform without causing significant downtime. But like you still have this major issue where there's a lot of merchants, still a majority of merchants by far are on a legacy system where they can't really, like users can't use all of these new features that we are hearing about on investor days, on like these various forums, on earnings calls. It's just very painfully slow, and we don't really have any transparency on like, okay, we understand the core issue, but how are we actually going to tackle that? So I don't know, do you have any comments on that? Maybe, I know you read a lot outside of the numbers. I'm more kind of dead set on the numbers, so maybe you know more about me, about the challenges there.
So on the tech side, yeah, PPCP is a little bit more modular, and my read on it too is it's a lot easier to, once it's implemented, you're on that system. Just future updates are easy. They've talked about, and they've struggled with the challenges of the past. Like one of the things I really liked seeing was that they had a developer day, they don't have those every year, but they're a lot more intentional in the way they're trying to roll things out. Now, I have questions on some of it. Like Fastlane, I think is at 2,000 merchants now. I'm like, man, that's a lot lower than I expected. I think there's some reasons for that, but they did not go into that at all. The street has no idea. Like, okay, what should we expect out of Fastlane for revenue? Well, it's not being monetized; it's just being scaled. Okay, well, why is it at 2,000 merchants then? It's like, well, might be holiday stuff. It seems like some of their partners that are there and are scaling or will be scaling Fastlane just said, once we get past the holidays, we'll do that. We'll see. We need to hear more of those things from Investor Day.
Yeah.
But the actual technology, like, the new stack is really, really good. We saw that slide from earnings. One of the things that Jamie Miller mentioned in her fireside chat, either late November or early December, she talked about the mobile experience on this new checkout stack and that they actually see a higher checkout conversion than on the desktop, which is amazing. And you might have seen my post on this, but bottom line, the reason why it's amazing is there's more and more of a shift every year towards more and more mobile. Actually, it was either last year that it barely broke 50%. This year, it's well past it, and it continues to be that more than half of all checkout experiences, not just for PayPal, are through the mobile platform. And the challenge for most other competitors is their mobile experience is not good. And PayPal, it is. It actually outperforms their desktop. It outperforms their peers. It's just great product. Do you hear that on Investor Day? Maybe. Did you hear that in earnings? Not at all. Not even a mention. It's like, oh man. There was a lot of little nuggets like that. Now, as far as Fastlane, one of the things that makes it really a nice guest checkout experience is some of these are designed by competitors, and it takes over your entire checkout process. Now, for some merchants, small guys that just don't have a specialized thing that they need to do, that's perfectly fine. They just want the money. That's great. Other merchants are like, no, we want to have our hands on the checkout experience. And so if there's a guest checkout module, it needs to be non-intrusive so they can put like coupons or rewards or whatever specialized touch that they want to add. And Fastlane is non-intrusive. It's designed to be that way. So it seems like it's very easy to implement. But they have a smaller number of merchants. And again, we'll have to see how that plays out in the future. But no, like I think the technology has actually improved. Like Braintree, we've seen improvements out of Braintree as well. That it was probably behind, for sure behind Adyen, probably behind Stripe. Now I think it's a near peer with Stripe. We've seen the way that it's being treated by Shopify. We've seen a couple of other merchants talk very highly about Braintree as well. So they've improved their tech and their backend, and it can take a while to actually see that translate to the revenue, bottom line revenue, especially when the integration. Like it's not like every single merchant out there is like, okay, yeah, let me go ahead and get that newest integration. They're focused on other things. So, but yeah, it's a slower process, but it's a whole lot faster than under Dan Schulman, where if he was in charge, maybe they'd have like, instead of 25% of US on this new experience, it'd be like 5%. No sense of urgency.
Yeah, and they kind of also under Dan Schulman, the earnings calls were like full of a lot of talk, a lot of promises, like, yeah, we're beating out Apple here. We're like, so I don't know if it's like a conscious decision not to repeat those mistakes, like the lack of details. But I mean, just look at the partnerships. Like, you wouldn't be seeing all of these new partnerships. You mentioned Shopify. We have Amazon with the Venmo integration. I mean, they are making moves, and these are like major platforms. Like you talked about the 2,000 customers on Fastlane before. Well, if it's anything like, we don't know this because they don't report it, but for Palantir, for example, 20 customers account for about almost half of all the revenues.
Mm-hmm.
If those 2,000 top merchants account for like 70% of the revenue, if it's like major platforms, then yeah,
Definitely.
maybe that's a good set of like pilots, but we don't get that info. So yeah, it goes back to this, like, yeah, we promised to be a lot more transparent, but at the end of the day, the only thing they actively did was like, yeah, we're gonna remove SBC from our adjusted numbers. I'm like, okay, that's great. I could have done that myself, but
well, no, I got to push back on you a little bit. I don't like. Let me just show you. So other people can see too. You're aware of this too, but we didn't see this kind of breakdown. We didn't see monthly active users. We did see, these two numbers. We didn't see TPA unbranded. We didn't see this mix. They didn't break out products like this before. And if you go into the appendix itself, like there's just a whole lot more data that we have access to than what we
No,
had
I
before.
had all of that except the monthly numbers, but you could calculate it yourself by averaging. Like I have that going back to 2013.
No, they did not have all this. There's a number.
I have it.
No,
I have it. What?
No, searching for Venmo. I don't think that they broke out Venmo at all.
No. Okay, yeah, that is true. They are breaking out the TPV for the Okay.
And P2P TPV. This is Venmo, PayPal, and Zoom. And so Zoom's actually mentioned here. They don't break out Zoom fully, but other value added, like they what we used to get under Dan Schulman was there would be like the flavor of the quarter. And so he'd be like, yeah, let me mention something about buy now, pay later. And that'll be like the flavor of the quarter. And then you wouldn't hear about it again, other than maybe a drop or a mention for like a year at best. Venmo, same thing. Like it felt like they were cherry picking highlights because there wasn't a lot of highlights for PayPal. So yeah, this is a lot more transparency, a lot more open and honest. And I feel like Alex Chris is being very honest with them. Now, I do feel like this is a second transition year. But yeah, we need to see an investor day, like where they're going. Like that's the biggest question. I think that's why, some people took money off the table, and it makes total sense. Is PayPal going to really drive sustainable growth where, hey, maybe this is a second transition year and we start to see that pick up on the back end, not just on the back, but also on the top line growth. But we need to see it. And the other danger too is PayPal is trying to do too much at the same time. Like they're working on, PayPal as far as a branded experience. They're working on Braintree and that whole shift there, monetizing Venmo, going omni-channel. They're launching Fastlane. They're even reaccelerating lending towards merchants. Can't remember what the name of that program is. Now they're a big business. They have 25,000 employees. They should be able to do more than one thing at a time. But it's like, okay.
Yeah, but as an investor, I sometimes have a hard time to remember all of these names of new initiatives. Imagine if you're not hardcore follower of PayPal. Now I have a hard time to just leave things alone. All of that account statistics you could have calculated before. Even actually Venmo TPV we have back to 2017. But it is true they did segment out the other stuff. That is new. I will give them that. But besides the segmented TPV, beyond Venmo, it's all the same. Maybe repackaged, but yeah, I don't know. But we can move on. Let's not get stuck there.
Yeah, but it's the more detail the better. And I will give you there was so in the United States we have the letter grades A through F. And then there's one that's an I. I means incomplete. You did not turn in all of your assignments. I can't give you a grade until you do. That's the grade that I'd give PayPal for this earnings, is a lot of those future looking products that maybe they're not ready to guide into revenue. That's fine. But we need to hear more on that. I think that's what Investor Day is for. I'd be shocked if it's anything other than that. They'll go over a lot of stuff, but stablecoin is one of those things where are they looking to move over more than just Zoom to payment rails? I know they're doing some of their PayPal Venture stuff through it too, but what's the strategy there? Where's the marketing? What does that look like? Fastlane, what's the strategy there? What's the end goal for this Venmo shift? What about omni-channel? What are they building into? And that's a challenging thing. So like Daniel said, did mention crypto revenue, stable coins, and ads. Crypto revenue, by the way, is one of those small things for them. The play with stable coins is about saving PayPal money, that they don't own their own payment rails like a lot of payment service providers. And so they have a great stable coin, the PayUSD stable coin backed by Paxos. This is the year of stable coin. There's just so many mentions of it. The SEC has changed the way that in their perspective towards it. A lot of banks are looking at getting into that as well. And so there's a real opportunity here under new regulation for PayPal to really see that transaction margin increase if they can move things over to new payment rails. Now, we may not
All right.
hear anything about it. And if you look at like their SEC filings, if you look at the earnings presentation and stuff, they rarely mention this as even existing. Like you wouldn't know unless you were a pretty avid investor, and that's kind of missed opportunity.
Yeah, I was gonna say, do you think they kind of dropped the ball because they were kind of early in regards to crypto? Like, don't they actually serve as a pseudo brokerage for crypto as well?
Yeah,
Like,
so they've more than anything partnered with Coinbase and some others as well. Like you can buy and hold crypto just for
mm,
cryptos on PayPal.
okay,
They
yeah.
probably should have expanded that, but that's not their main focus, and that's fine. But I do feel like that they've dropped the ball with the stablecoin where
I mean, there are synergies, right? Okay, sure. The stable coin, it's mainly to make transacting cheaper because the systems in place, like, as I'm sure you've talked about it on your channel before, like payment processing as a whole is like a race to the bottom. You have all these massive players where everyone just annually keeps losing more and more money. As when you track like their take rates, like everyone is a loser. Like Stripe doesn't win, PayPal doesn't win, Adyen doesn't win. Like we're all losers. Like it was a race to the bottom. So I think like a stable coin, it's not new now, but like we aren't really seeing the effects of that. But if you're gonna do that, you have all of these synergies, especially under the 47th president right now, that has like spoken out like, yeah, we're gonna revamp the whole banking system, we have this crypto czar and stuff like that. And I'm like, okay, maybe it's your time to shine. I don't know. I'm not a big crypto guy. I know you have a lot more interest in crypto, but I'm like, if you're gonna do it, like, think about all the synergies and how you can really
Mhm.
leverage this, because it is a unique position that they do have, being so massive and actually having an initiative with a stable coin. And to my understanding, it is very credible, fully backed, unlike some historical examples that haven't been, and stuff
prudentially
like that.
regulated is the word.
Yeah, but at the same time, as you mentioned, like, are they biting off more than they can chew at some point? Maybe. It is a difficult one because as an investor, you want this excitement, you want to see a lot of happen, and they are doing a lot. But when you realize the timelines it takes to actualize these ideas and these initiatives, you kind of lose the excitement, right? And I understand it's not going to be for every type of investor out there. Like, I get that, but still, like, even disregarding all of that, just looking at the current business, I still think it's so undervalued that it should still be like a clear buy, is the way I
Yeah,
look at it.
and I agree. Like so, real quick on the crypto, the real opportunity though is exactly what you had said is shifting over as much payments as they can. It's saves them a lot of money. It's near instant. It's trackable and it's also programmable. All of those, just there's so many advantages for a USD stable coin, and there's not going to be like the one true coin. USDC is probably the best of the best. It has the most spread. USDT I have issues with, but there's a lot of them now that are coming out, and I feel like PayPal had an opportunity to shift more parts of their business over, kind of like they did with Zoom, which saved that aspect of the business for them. We really need to hear something about that on Investor Day, and if I don't, I'm going to be like, okay, I don't think they're taking their stablecoin seriously as a shifting things over to their payment rails. So I should not think of it that way at all. And that diminishes the bull case for me because as large, if it is a small company, it's like, oh yeah, doing their own payment rails, like no big deal. For something as massive as PayPal, like if they get a, let's say 20 basis points, 30 basis points bump from having their own payment rails, that is massive. It is absolutely massive
Mm.
beyond just, everything working basically near instant and being trackable and
So,
programmable.
let's just set the stage here. So, how big, like in percentage form, is your PayPal position currently in your portfolio?
Everything's run except for PayPal. It ran the other way. So probably PayPal's around like
It's shrunk.
6 or 7%. Uh,
Oh, okay. That tiny. I don't
yeah.
know why I was under the impression that it was like at least like 15
No,
to 20.
no. So my personal philosophy is I don't build anything above 10% unless it's an absolute unicorn that has no competition,
Mm,
that's one of a kind in the space. The only two companies that I have like that are Palantir, which is a huge part of my portfolio, and I intentionally built it that way, and Tesla. And the market didn't give me enough time to load up on Tesla like I'd like. Tesla's probably about the same size and weighting as PayPal.
I
PayPal, I'm
mean,
very comfortable.
you are about to get that opportunity again. Don't
I
squander
think
it.
so. And
Maybe move some PayPal into it.
no. But
Okay,
but
so
so if Investor Day goes really well, and I'm like, hey, the market is absolutely missing it, I'll build that up to about 10%, and then I'll just let it ride there. And hey, if it pulls back and it's trading at like $50 a share, well, all of a sudden it's like 6% of my portfolio, and I'll add more if there's not a warranted reason for it. I think this sell off, it makes sense, but it also doesn't. Like, I understand people being impatient, thinking it'd be quicker. I was one of those too. I get that, but like falling to where it's at right now, trading at these levels, price to free cash flow, looking at, like, even if you assume zero growth, and we'll look at valuation here in a second. Um, uh, let's let's do this. Let me run a quick ad. Then we're going to get into some questions. Let me do the 10K, and then we'll go into valuation last. So running an ad right
you
now.
do ads manually?
Yeah.
That's crazy.
Yeah. Tevis showed me how to do that. And I
Like this
figure
is
any
more
live stream that I do
like
where
a
it's
YouTube.
longer than an hour, I'll do that. And thank you guys for putting up with it. I appreciate it. More PayPal for me to buy that way. So,
You
but
just get premium and you don't get interruption, but we still get money. Everyone
exactly.
go by YouTube. Like I have to say, like YouTube Premium is like the one subscription I can't be without. That's like the most value for your buck. Like get YouTube Premium. Honestly,
It is a nice premium product. All right, so this formatting didn't come out, but I basically did a run through of the 10K and just some quick things. Any of these, Emir, where you're like, hey, I want to talk about that, you just jump in, okay? So they extended their buy now pay later agreement with KKR. They didn't spell out KKR, and Alex Chris mentioned buy now pay later was up 21%, which that was good. I'd love to see that as a normal thing on the slide deck. But what I thought was really cool with that is, if you remember the first time that the KKR deal was announced, like that next earnings, it actually had two slides. This time PayPal's like, oh, yeah, we'll put it in like the footnotes in our SEC filing, because there's a lot more exciting things happening at PayPal now. That wasn't the case before.
yeah.
They had some marketing spend. They were operational efficient. Other than that, I thought this was interesting too. So you remember they had those layoffs. This isn't
I
all the
actually
reason.
let me ask you about the sales and marketing, because famously they got this huge actor. They made this series of ads. I watched them. I wasn't really swayed, but maybe it's because I don't understand the star power of the actor. Is he like really, really big in the US? Like, because I
He's
have no idea who he is,
yeah,
and
he's
just
huge.
watching the ads. Okay.
Everybody at my age knows who Will is. If you're like
Mm.
18 years old, maybe not, but he was probably in his prime like 6 or 7 years ago. But yeah, everybody knows who he is. Massive star power. Is it worth the spend? I don't know yet. That we'll be able to evaluate that, I think, in a year. But I did like seeing that they were being efficient, even though they did have this 260 million spend. It wasn't just on Will Ferrell. Like, I'm sure he got a lot of money too, but yeah, I saw advertisements everywhere.
Really? Oh,
Yeah.
that's great.
And so keep in mind, like, you're probably not, just because they don't have those products out in Europe yet. So maybe when they do, like, they'll just roll this out. Maybe not with Will Ferrell, but they had layoffs, and they had 438 million in restructuring costs, partly as a result of the layoffs. It wasn't the full thing of it, but 307 million was due to that severance benefit, which were substantially completed for the fourth quarter. But it saves them about 575 million. So 168 million saved this last year, more going forward. So,
Dojing it up.
what's that?
doging it up over at
That's
PayPal.
right. Yeah. There's still, I think, probably a lot more to go, but I don't know that they're having more layoffs. Probably they're going to have some natural attrition of like 1 to 3% per year. The dollar drag I mentioned before. Yeah, they ended up scaling down their credit card partnership with Synchrony. That's one of the reasons why, if you look at other value added services, it's down a little bit. They are getting better. This is weird. Like the formatting came out all different than I had it. The transaction losses, that's kind of blurry, but you can see 2024, it's not because they did fewer transactions, it's because they've gotten better at what they're doing. And a lot of that is actually making better use of that data that they've had. They've always had an advantage in that. They just haven't used it fully. So the loss rate was down to 0.07%. They're re-accelerating merchant loans, and if you look here, they're actually performing very well. So down here is 2023, and you can see that they had 87% that were current, some that were overdue, and as you look through, versus here, 90.4% are actually current. Some are slightly overdue. So, but the actual volume, it's increased a little bit. They went away from that somewhat just because Dan Schulman, like, I don't understand the guy. Like, COVID was happening, and they had historically very, very tiny loss rates. The government was giving free money, and they said, "Hey, let's just go out there and lend like crazy." That wasn't sustainable.
Let's
So
see.
they ended up going away from it, thankfully. But yeah, that's performing well. Consumer loans are also like was the next thing I was going to share, and that's increased as well. Let me put that up. So you can see they're performing 96.6% are actually current versus at this time last year 95.4. There's a lot of like geek stuff as far as the numbers there.
You know that table you just showed? Just so
Yes.
people understand the pain, this table, to show it, like just take one half because it's the same info, it's just comparison. This takes 100 rows in Excel to track. This small table takes 100 rows. The pain is real with this one. I'm always like so lazy to update it. I don't even input it to 2024 numbers yet. It's both for the consumer, both the merchant receivables, delinquencies, and allowances, and on the consumer end, like that's just so painful. I know I added nothing by saying that, but just I wanted to share my pain like a therapy session.
Yeah, like
100
these
rows each, like it's like 250 rows to do both consumer and merchant for that. It's painful.
And they are. So 24,400 is their global headcount per the 10K. And yeah, they ended up shifting from, a lot more virtual to a hybrid, so more in person, kind of following what Jamie Dimon's comments were for his business this week. So just a few little notes and
Didn't he
highlights.
say the opposite, or what did he say?
Yeah, previously they were even more virtual, and now they're like
okay.
a hybrid model. So I think I
get it.
I'm curious what that actually means. My understanding is that I think every, or at least most employees. Well, so there's a chunk, there's a cohort that are just all virtual and remote and are able to do that, but a lot of them are in the office certain days of the week and then work from home the rest. I think it's important to have some of those connections too. Doesn't mean that everybody needs to, but
yeah,
so
we don't know. At my work, hybrid means you are in the office X amount of days, and then you can work from home the rest. So
yeah,
maybe
I believe that's the model. I don't know where that splits, if it's different for what, but just thought it was an interesting point. So, a couple of questions, and then we'll get into your valuation. So, I thought this was a good one from Sigig, and it's fair. Like, why? And we'll throw this out to you too, Emir. Not necessarily for hymns, but why buy a company like PayPal? Which I think that the worst case scenario for PayPal is its opportunity cost, but there's a real chance that let's say PayPal goes up 30% this year. It's like, okay, well, that's awesome. But everything, it's like, I think last year it was the worst performing stock in my portfolio and went up, 35, 40%. So it's good. I was happy with that. But why buy stocks like PayPal when there might be something else that grows faster? So
you mean a stock appreciates faster?
Yeah, exactly.
Yeah, if you know about those simple ones where you already know which stock is gonna appreciate faster, just let me know.
Yeah. Yeah, I mean, and that's the reality. And the market is very risk on right now, but it's not always. And it tends to rotate into more conservative names in those risk off environments. So let's say that something does happen this year. There's always worries. We saw like 2 Mondays in a row where there was a big drop initially in the market, and then they kind of recover tariffs and DeepSeek. And PayPal, and names like PayPal tend to lose a lot less in that kind of environment. So PayPal for me is a little bit defensive, but I also see an opportunity here. But I think I should say, I need to hear more about it in Investor Day. But I really do think with the new initiatives, with the focus to driving profitable margin growth, and all that they're doing and being more efficient, better technology, that they can return to that status that they once had, where they're seen as a leader in this field and industry. They kind of are, but not as far as innovation. That really died down. And I do think that there's a pretty decent chance, if I'm understanding their strategy right, and I need to hear that from Investor Day, I might be wrong, that they will return to all-time highs, by 2030. Like, that would not shock me. It also makes it a lot easier that their float is a lot smaller. So all-time highs now versus back when they were previously there in COVID, a little bit different. So what about for you? Like, you're in more tend to be mafia names, is I think how you describe it. Why buy a name like PayPal when there's other opportunities?
I had
What
to
is it
change
about PayPal?
to Fortress names because Seeking Alpha banned me because I used the word in an article. But yeah,
Oh,
no, look, the thing about PayPal, specifically at these levels, like I would be a lot more conservative otherwise, but there's just so much built in safety. For one, the expectations are super low on it. Like they are growing cash flows at an accelerated rate, which like even bulls were kind of caught off guard by the actual cash generation of the business. Like while revenues might not be the most interesting, like as an investor, what you should care about is the distributable cash flow to you, like the free cash flow to the firm, or unlevered cash flow, however you want to call it. That's what matters. So even if revenues are stagnant, if they are increasing margins, like I care about that, rather than if margins are stagnant and they're just increasing revenues. Like the net thing I care about is the free cash flow to the firm, because that's actually the cash they generate. If they generate that cash on a large revenue base or a small revenue base, it doesn't really matter to me. So we have that security where like the expectations on PayPal operationally are super low, uh, where it's currently trading, and then they are actively repurchasing shares at like an accelerated rate. Like they are committing cash they currently do not have to, like, yeah, this makes no sense, we're going to buy back. So you have a lot of these like safety measures in place. Like if PayPal drops 50, 40, 30, like the amount that they will repurchase, because they are generating a ton of cash, like that will just like compound even faster. So you have some kind of safety mechanism that protects you from the downside or even being stagnant. As I just shared, the scenario where they repurchase their whole business essentially like half by the end of the decade, so in about five years, and then give it 2-3 years more, and they're private, like that won't happen because it makes no sense for it to happen. But that's just like the absurd scenario we're finding ourselves in. So for me, it was always about like, this is just so outrageously undervalued. Like when we first initially started investing in PayPal, I made this like 0% DCF scenario, which
yeah.
I have. I don't have that around
Oh,
anymore.
oh,
Well, but
yeah,
we can recreate it. It's no
yeah.
problem.
Do you have a fairly recent valuation, or have you not
Yeah, yeah,
updated it
yeah, yeah. I
recently?
have, yeah, I have
Yeah.
an update
Let's
with
go ahead and
the
pivot onto that, and we'll wrap after we look at the way you value it.
Yeah, sure. So it's a very simple and straightforward one. I don't really overly complicate it with PayPal because they don't break out a lot of the operational. Like we get TPV breakouts, but we don't know the operating margins per segment. We don't know the actual performance on by each segment. So I make it pretty simple. Can you see my?
Yes, adding it now.
Oh yeah, so here's what I was talking about. Like just doing that we showed the like delinquencies and stuff. It is hell. Like this is what it looks like 200 rows. Okay, but that's not what we're gonna. So here's my valuation. So the way I approach this. So first you need a few components to create a model. And the way I do it for PayPal is I anchor it to a market share of digital payments, and that gives me my revenue growth. So first we take the total payment volume for PayPal, and then we have the take rate on that. So for example, in 2024, 1.7 trillion total payment volume with a 1.9% take rate. It gave us essentially $32 billion of revenue, which was 6.8% growth year over year. That's not very impressive to see those like mid single digit growths.
Mhm.
Uh, and then I also include just for visual, like I can zoom in a bit, just to see like the market share against the digital payments forecast. So this is just a forecast. Of course, 2034 hasn't happened yet unless you're a time traveler. So this is a forecast by Statista, I believe. I think it's now paywalled, unfortunately. So I don't think you can easily access this unless you want to pay thousands of dollars. But yeah, the way I do it, I forecast based on their market share, which I have them losing a lot by next year. So, of course, as I mentioned, they were kind of static here by 15 and a half, 15.2, and then 2024 was a big drop to 14.6. I have that dropping even more drastically based on the commentary that we got. Like, yeah, growth is gonna take a hit. So I have that going down to 13.7% of market share, which is a lot in the context.
Yeah.
I have the take rate 1.9% still. We'll see if I will have to revise that. But over time, I'm not overreaching, I believe, with the take rate. I don't believe we will see those all-time highs again, like the glory days.
No.
Um, because it is a race to the bottom. There are a lot of competitors here. Maybe with the stable coin, if they can actually charge customers the same but improve like the cost associated with that, maybe we'll see something. But for this scenario, I have them at 1.9 for 2 years and then just at 2%. And I have them gaining back some of that market share, but a net loss of market share. So from
Mhm.
14.6 2024 down to 14. So I'm like kind of bearish. I'm like, yeah, they're gonna lose market share. They're not gonna really get a lot more profitable. So compound on that 8.2% for the revenue. And if we look at the Wall Street forecasts, like only like the next 3 periods have many analysts turning in their forecast, and then it's just one. But looking at the Wall Street forecast, they have it actually compounding at 7.1. So they are even more bearish than me, which just like sets the bed for the expectations here. So when you have your revenue, it's basically just calculating, okay, how much of that will become adjusted free cash flow by looking at the reinvestments and stuff like that. But similarly here, I have them actually not returning to glory days, which was above 20% prior to 2021. Like they used to have amazing margins. I don't
Mhm.
have them returning to 20% free cash flow to the firm. And I have them doing a lot of capital expenditures just to build out, typically with software businesses, which I guess we can call PayPal a software business.
Yeah.
uh, there are R&D costs that can be quite hefty, but typically not a lot of capital expenditures. You don't typically buy out a lot of offices, a lot of data warehouses, data centers, stuff like that. But PayPal is actually guiding for 1 billion for 2025, which I'm curious to see what's going to happen with that. But essentially, you take your revenue and then you take your free cash flow to the firm margin, which you have over the forecasting period, and then you return it to present value. You apply some formulas to calculate beyond 2034, and then you get your fair value per share. But I want to talk to you about these assumptions. So essentially, over the next 10 years, I have PayPal growing revenues at 8.2%. Does that sound optimistic? Does it sound bearish? Or is that like a solid bear case in your eyes? And you're a follower of PayPal, like you track this business. Do you think 8.2% sounds like, what's
compounded?
that?
That sounds a little bit bearish, but you're going out through 2034, so I'd say it's just slightly. I'd probably have it like just south of 10%, because I do think that there will be a reacceleration in their business. We also see acceleration in the e-commerce, and frankly, like it's been a challenging macro until like relatively recently. Over the last 6 months, it's shifted for PayPal. So I'd probably put it at 9%. But where I see what I love about this is like how conservative you are. That like PayPal's guidance, like what I think the analysts are doing, and like yourself, they're not banking on shifting over, to the PayUSD stablecoin. All of a sudden, margins and take rate go up a lot. They're not banking on Fastlane. They're not banking on the advertising business, which is a very highly profitable, high margin business. None of those things. So in this, there is a lot of potentiality for upside. And the great thing, and I know you get to the bottom line, the intrinsic value, you can see it at the bottom. But you're buying a business that is undervalued, assuming none of these new projects that they're working on works out at all.
Yeah, and by quite a lot.
And there's still upside, and not just upside like for the existing business, assuming nothing new at all, period, nothing actually ever works at all. But like if Fastlane does dominate the space, and that product, by the way, is not a, it can be one of like multiple that guest checkout is a winner take most. The stablecoin impact could be massive for them. Advertising, they have a real opportunity here, I think, to at least hit the annual run rate of $1 billion of Uber within a few years. Like we'll see how they build it out. It might be slightly lower just because they're a behemoth and it's a little bit different than the Uber experience, but they have Dr. Mark Graether like running it. I have confidence in that. But we're putting no assumptions in that by this valuation. So I love it, Emir. Keep going.
Yeah, no, I just want to mention, like, when we're talking 8%, so this is by far the single largest player globally in digital payments. A majority of the world is not digital, and a majority is still using cash. Forget like credit cards or digital. Like a majority of the world still runs cash. So there's a lot of growth to be had within the market itself. And if they can keep, I think this Statista forecast is just a forecast by one that I looked at several investment research firms, and I went with Statista because it kind of seems like a baseline. It's not like optimistic of an outlook. It's just like, here are forecasts, so I went with them. But there are a lot of forecasts where they see like digital payments growing like 15% compounded.
Yeah,
like you can see this Statista one, the last from 2029 and onwards is just 7% growth. Like, do you believe with half the world still not even like transacting digitally, that digital payments overall globally will just grow at 7%? Like, it makes no sense. So even there, like the base assumption is very bearish itself. But then if we look at free cash flow margins, which is the next key component, like I don't have it here, but let me just quickly find it so we can see the historicals.
I told you guys, like his spreadsheets they make Tanner look like he hates spreadsheets.
Here, so historically they have had like 21%. It's been up and down on the showman, but 2018 was 21, then we had 18, 19 in 2021, and then it's just been going downwards. But since that period, do you believe like it's, especially when we're talking profitable growth, like just returning back to 17% free cash flow to the firm margins. Do you think that's like overly optimistic? I believe that's like a kind of bearish base case scenario to me. Like
Yeah,
it's not crazy at all.
that sounds base to me. I wouldn't say it's bearish because it's it's higher for them where they're at right now, but probably base case is more realistic.
Yeah. And with those assumptions, of course, we don't have time to like go through all the details. We get $130 fair value per share today, which is presents an upside of 66%, and this is like nothing special. But let's do that scenario that I did this when I initiated my position, where I assume 0% growth. So now we have 8% compounded, but let's just do zero. Let's do So we take the revenue at 0, and then we take we didn't even have to touch revenue. We can just do free cash flow at 0%, like that. And then we get, of course, I am diluting every period. I know they are buying back, but they use cash to do it, so you actually have to dilute every period. But we get $67 per share, and my average is in the 50s. So when I bought it, the stock assumed 0% growth, and it's not far from that. Like we were almost down to the 60s again post earnings, and I'm like, what is going on? Like the business is growing, but even if we assume that it's not, like cash flows are at 0%, revenue is at 0%, it's still worth $67 per share. Like that is just crazy how much safety you have built into the price. Like it's just outrageous to me,
And that's really how I see PayPal. Is it feels like if you want a margin of safety, if you want a position that's safe, and there's no like such thing as a guarantee unless it's like a bond or just cash or something. But it feels better than cash. Like there's a good chance for upside. There's a chance for a high upside, over time, not talking like this year. It's not going to do a HIMSS. And like the downside, that's the only silver lining of the price action here is it just de-risked itself. It's like, what's going to happen? It'll go down to like $66. That's not a huge drop. Is it going to go back in the 50s again? I mean, probably not. Like there'd have to be some crazy macro thing happening to drive it to that. And I just don't see it.
And imagine how much further those $45 billion of authorized buybacks go when the stock price is not like at 78 billion market cap, but it's like 50 billion. Like that's almost, by just the authorized buybacks, like you can almost buy back the whole business.
And their free cash flow is growing. It's not shrinking. It's not dying. They posted their highest ever, is up 40% year over year. They've projected that it will continue to grow. One question on this. Sagig noted 4.63 terminal rate. It seems high to him. What do you think?
There is an argument to be made. So the reason I use, as he correctly guessed, I use the 10-year treasury yield as a proxy because economists, so typically when he says 2 to 3%, that is what the GDP growth has been historically in the US. So typically people use that because terminal growth means beyond the forecasting period. So 20, 35 to 40 to 50 and so forth. The reason I use the 10-year treasury yield is because economists can't forecast the next quarter's GDP growth, let alone what GDP growth will look like in 10 years. So instead of trying to guess it myself, I just use what the market is implying, and I use the 10-year treasury yield as a proxy for that. So a valuation is only like at a point in time. You can't like do it today and come back in 2 years like, yeah, by the way, what is this business worth? Like, no, like it is at a point in time. At this point in time, the market is implying economic growth, which is a lot more than it has been historically, which is I just use the market assumption. So I don't make any guesses there. So that's why I use that as a terminal rate. And if you read a book that says just use historical GDP growth, like that's completely fine as well. But I'm not trying to guess that it's gonna look like historical in 10 years from now or 40. So I just use what the market implies. It's a lot easier and more straightforward.
Yeah. Well, thank you, Amir. I appreciate you coming on and just sharing your views on the earnings. It's nice to have another pair of eyes, and you look at things a little differently than I do. So it's always good to have another perspective. Of course, we await Investor Day. That'll be a multi-hour event on February 25th. I'm sure that they'll post a link sometime relatively soon, so that we all can view it together. And yeah, I'll for sure talk about it. I'm sure you'll mention some things, Amir, too, because that's a very important thing for us investors. So excited to see what they hold. Excited to see what PayPal's future looks like. Amir, how can people find you?
Uh, I don't know. Type F
Yeah,
Capital.
I'll
I
post
have a
it in the
link to,
comments. Why don't I do that?
you just
I'll do
go
your
to
Twitter handle.
typefcapital.com and there's everything there. I just wanted to say, like, on the stock price, just one final thing, and I'm gonna let you go, let the chat go. But I think people at the end of the day, they want to know, when's this stock gonna go up? And let me tell you, as we mentioned, investors aren't the most patient. This is a slow turnaround. But I believe if we actually start to see something tangible from the ads business, which has the potential to be many multi-billion dollars of revenue, considering their position as, like, they are the best positioned in the world to serve like accurate, actionable ads, considering all the consumer information that they do have. When we see something tangible, I think the story changes completely. And I don't think we have to wait until the end of the decade to see those all-time highs. I think it might come a lot sooner, as soon as we have something tangible to attach to the story that isn't like slow turnaround. It's gonna take quarter by quarter, we're gonna review it, and then maybe. No, if you actually show us something tangible, I think that might be the catalyst to actually take the stock out of the doghouse. Like, do you have any predictions like that? Or
Yeah, so I mean, the market's forward looking, and that's the issue. Is like it's an incomplete. It's like, okay, where's PayPal actually going? Investor Day is a chance to re-excite investors towards what the business is actually building. Give some of those details that they left out in the earnings call. Of course, I attended the Robinhood Investor Day, their first, and you could tell based on the price action, but also talking to institutions, like those guys were there. We interacted with them, and they were like, "Man, this is pretty freaking amazing." I mean, not in those words, but like they were impressed, and you could tell that. There's a real opportunity here. Hopefully, that PayPal makes the most of it, and I think that they have the right team to do that. The market, since it's forward looking, it doesn't have to just see results. Like, it can see vision, it can see execution, it can see
the
where
narrative?
some of these first look products are going. As such, most of my recent PayPal buys are long term. I did do a smaller speculative bet based around Investor Day. So I normally don't do those sort of things. Not going to share the details on that or anything, because I don't want people to follow me, especially if that's not your normal thing. Because I mean, it could absolutely stay flat, and then it's like, hey, I've lost a little bit of money. Like, it's not a massive thing, but that I've got a part of my portfolio that is swing trading and not long term holds, and so that part I'm like, yeah, I want some more PayPal exposure there on the short term. Long term, like, I'm giving myself plenty of time. If something changes in the thesis, we'll call it out. But thank you guys all for watching, commenting, and subscribing, interacting. Be sure to follow Emir on X. I've got his link there. Here is his website as well, typefcapital.com. Great detailed mind. Good follow. Also, Daniel, thank you for the $5. Appreciate you. Anyways, for now, happy investing.
See you guys.